Hey traders, Lance here. As Roger is missing, I'll be covering for him until then. Hopefully we can find him here in a couple days. Let's get to what's moving in the markets. So it's Monday morning, about 8:30 a.m. Eastern time, and we had Fed Powell going on 60 Minutes last night. Basically, he said we're not out of ammo to fight the recession, and he says we won't be back to the full workforce and full economic as we were before the coronavirus without a vaccine. And then, and I find really funny, he said, we can just print money digitally. They asked him, where does this money come from? And he goes, we'll print it digitally. Big news today, though, as well, is mRNA. They actually came out shortly, about 15, 30 minutes ago. The stock's up 32% right now. Wow. And they report positive data on the early stage of the coronavirus vaccine trial. So this put another leg up. Let's actually look at the futures here. We'll look at the S&P futures. I'm using TD Ameritrade Thinkorswim, and we can see, we actually got a little bit of a larger spark here. There we go. As you can see, that was good for about, 30 plus handles in the S&P, just that news alone. So we already gapped higher, and then we added about another 30 plus handles on the mRNA vaccine. So let's look at some names I want to go over, some good, some bad. And all I have here, this is just a 200-day moving average I'm looking at, nothing super complicated. And then down below, I'm looking at implied volatility. Remember, as stocks go down, implied volatility goes up. As stocks go up, usually implied volatility goes down, unless it's pre-earnings, an FDA trial, maybe an analyst meeting, a conference, some major news that you'll have implied volatility go up until that uncertainty. So one thing that I'm looking at, and what I like doing is looking at the sector ETFs. I think Roger uses bar chart. I just have it off on my TD Ameritrade Thinkorswim that I use. If you want this, I can actually share it with you, or export it, and you can import it if you use TD Ameritrade, or you can do it to Microsoft Excel. Is I just have the top Spider ETF products into a watch list. And so I have like XLK, Microsoft, Apple, Cisco, XLU for utilities, financials, energy, healthcare, consumer discretionary, industrials, materials, real estate, no retail, even though I love trading retail. But just email me at Lance the Future of Wealth if you want it. So what I like doing is saying what's been leading and what's been lagging here in the markets. Financials have been lagging. We had Wells Fargo with a short squeeze, I believe it was Thursday, and that led to XLF, which are the big banks, moving up. And then the next day, they were relatively weak. Financials are up about 80 cents here. But financials are painting a different picture than, let's say, tech. We could look at XLK or the QQQs if you want to look at tech. So we have tech outperforming price above the 200-day moving average, and you have financials lagging. Why is that? Well, the banks, especially your banks like Wells Fargo, I mean, look at this chart. The stock is right next to a 52-week low. It didn't even have a follow-through on a big short squeeze that it had on Thursday. On Friday, it was down about 3%. So the financials, especially the big banks, even the regional banks, which have been lagging, came out and said, hey, we don't see a lot of growth in the economy. And in my opinion, the banks are the ones in the know, right? They're the ones lending the money. And they've been very, very tight. And they don't want to get loose like they were back in 2008. And therefore, growth, especially too, is if we go to negative interest rates, right? Rising interest rates are quote unquote good for banks. What do the banks have? If people aren't borrowing money, if they're not taking out loans, if they're not buying houses, the banks, and if again interest rates go to negative, dare I say, the banks are a big dark cloud, especially European banks. You can look at the ETF. It's the iShares Euro Bank ETF, EUFN. Look at this picture. I mean, this is absolutely horrible. You look at banks like HSBC, right near 52-week low, while the Nasdaq's green on the year. S&P's down about 13%. Now it's going to be down about 10% after this morning pop. HSBC, horrible, right? AIG, horrible. These European banks are really, really red flag. And then you look at KRE, the regional bank ETF, it's not no better. Look at that English right there. But these are horrible looking charts. If you're looking for ketchup, and I don't mean put it on your hamburger and hot dog, but if you're like, Lance, I miss the tech or the NASDAQ rally. And if you're looking for something that off the coronavirus sell-off, you think the market's going to rebound and go back to all-time highs or go back to even, we'll say, you can look at the banks. I actually don't have a problem with them here as a catch-up trade, not regional banks, XLF, not necessarily as a long-term play, because I'm still in the camp where we don't know where we're going to go 6 months with the coronavirus. What happens when people stop getting their unemployment checks and all their free money? What happens then? Companies aren't going to hire. If you're looking short term, I feel like the banks can outperform short term, and that's oof, and that's something I'd probably never say, but I feel more comfortable going out and buying banks than I do buying Apple. God, that sounds so weird, doesn't it? I can't believe I'm saying that. Or even buying Microsoft or buying Shopify, because names like this, I feel like you're chasing and you're late to the party. The banks, you might be a little early to the party, but you're not going to be late to the party, right? I feel like there's more pain buying names at 52-week highs than there is trying to get some growth out of the banks. And you can look at the small banks, HBAN, Regions Financial, RF, Fifth Third Bank. They had some insider buying actually. These names are like $9 to $16. You can look for them to play catch up. I think instead of buying like Goldman Sachs, which technically is horrible, the smaller dollar regional banks, maybe look for them for catch up. I keep saying catch up like the food, maybe because I'm hungry. But I just like them better than going out and trying to, let me buy PayPal up here. I don't know. I mean, the charts are fantastic. Or let me chase Twilio up here. I just feel like you're late for a trade point of view, I should say. Some names that caught my attention actually in tech are HPQ, the computer name. They had like 50,000 calls bought the other day. And I know they were talking about the Xerox merger. That got canceled though. But yeah, look at this call buyer here. 17,000+ July 17 calls. No, pardon me, they added 34,000. So that one has caught my attention, HPQ. Even Dell, people working from home. Like here's that. I guess those are my two tech plays if I have to buy tech. But you see, they're not at 52-week highs, right? Just looking for names that have some room to run to the upside instead of chasing, basically. We start having big earnings report, or not big earnings reporting this week, but we start having names report this week, like TJ Maxx, Lowe's, the home builder, or the home improvement store. These charts have really came back. Let me see if I can pull earnings calendar up here. These names have really came back strong. Here we go. I got it. There we go. We have names like Walmart, Target, which have held up extremely well. Kohl's, a name that has gotten beat up, very hard with retail being closed. You have Target, BJ's, Lowe's, TJ Maxx, one of my favorite retailers, Ross. So, in my opinion, with earnings, we had Nordic Tankers, NAT is up about 5% on earnings. In my opinion, what's going to happen on earnings, and I love playing earnings, is that the bar NVIDIA reports for semiconductors, which NVIDIA has already rallied so much off the lows at 52-week highs. You're going to have earnings expectations so low that I don't think you're going to see like 20 to 30% moves to the upside. But I think you're going to see, let's say a name has when these names report earnings, they don't give guidance or the earnings are okay, they're not going to get hit hard. You know what I mean? They're going to get free passes. And there was a report saying by Goldman that earnings expectations might not be back to normal till 2021 or so. So what the analysts do is they lower expectations so these companies can beat or meet them. Obviously, we haven't had a coronavirus situation ever. So some names that have caught my attention: Take-Two Interactive, just because people are playing video games at home. I love seeing Target report. I don't think you're going to have a 20% move, but they're fantastic CEO. Walmart, I pretty much imagine these names pretty neutral. Home Depot, and none of these CEOs are going to come out and say, "Oh, it's doomsday," blah blah blah. I'm sure they're going to have optimistic outlooks. Splunk, an internet software name. Best Buy actually got an upgrade already today. So names for earnings, a lot of retail earnings there. In my opinion, the big dark cloud is definitely still retail, especially names that have not moved to online. XRT, I will say, is a horrible ETF if you look at the make of it, of what makes up the ETF. So I wouldn't look at that necessarily as a big play. But Home Depot and Lowe's, look at these names coming back. If you like them, maybe you wait for a dip if earnings aren't perfect, so to speak. So one other thing I want to go over really quick, I don't know how long this video is, just some things I'm looking at on the market. LQD, it's the investment grade bond ETF. This is what the Fed is buying up. As you can see, they came in and bought it on the dip. They literally said they did. Now they're doing it here. And then HYG, high yield, something to keep an eye on as well. Again, it's pretty right flatlined from the crash here. If these names start moving up, you'll have that overall market holding up as well. So, or pardon me, HYG, not HYD. There we go. HYG, high yield ETF. So keep an eye on that. Look for the ticks, NYSE tick, if you're day trading during the day. Positive 800 tick or higher, institutional buying. Negative 800 tick or lower, institutional selling. And then another thing to keep an eye on, and you can look at this on a daily time frame if you want, is the NYSE trend. The trend will move inverse basically to the S&P. So if you have the trend going up, the S&P should move lower. If you have the trend going down, the S&P should move higher. So keep an eye on that as well if you're day trading. I think that's it, everyone. Have a fantastic trading day. Shoot me an email anytime. And we are up 83 handles now. Wow, and the spoos. 85.